This is episode 137 of the Rohit Radio Show. Let us begin. Here are 10 common investments to avoid. Number 1, mutual funds. Here is a basic rule of life for you. Never give control over your time, your money, your emotions, and your projects to anyone in your life. The moment you violate this rule, you are inviting unhappiness in your life. I repeat, never give control over your time, your money, your emotions, and your projects to anyone in your life. Try violating it and let me know how it goes. When you invest in a mutual fund, you are giving away control over your money to someone else. You are relying on someone else to make money for you. You are far better off learning to trade and invest on your own. 30 minutes of learning per day translates to 120 hours of learning per year. In less than a year, you will know what to do and what not to do with your money. Avoid mutual funds and choose to manage your own money. Money management is not rocket science. Anyone can do it. Number 2, corporate bonds. Look at the inflation in your economy. Do you think corporate bonds will be able to pay you an interest rate which is higher than inflation? Moreover, why take the credit risk of a corporate bond? What if you buy a corporate bond and the company that has issued the bond to you goes bankrupt? What legal recourse do you have in those cases? Number 3, fixed deposits. Well, the same logic applies to fixed deposits as well. Never expect the interest rates on fixed deposits to be higher than the inflation in your economy. That is just not how the system is set up. The odds are always stacked against you. Why do you think banks have become billion-dollar entities? Where do you think that money came from? Stay away from fixed deposits and learn how to trade and invest your own money. Number 4, cryptocurrencies. A cryptocurrency is just what it says it is. It is a currency, not an asset. An asset is something that must provide you monthly passive income. An investment is something that must provide you some yield on your investment. A cryptocurrency is neither an asset nor an investment. Hence, I say, stay away from cryptocurrencies. And for some reason, if you cannot resist the temptation, then do not put more than 3% of your liquid assets into these cryptocurrencies. Number 5, stocks. If you are not trained in the stock market and you dream of making money from it, then you are in for a disaster. The stock market is a game that is suited only for professionals. Stay away from stocks if you don't know how to do fundamental and technical analysis of stocks. Number 6, insurance plans. The fastest way to lose money is via insurance plans. Insurance is supposed to cover your risk, but it's common to see insurance companies combining insurance and investment together and bundling it into a single product. Well, the management of such products and their distribution costs money. That money is recovered from whom? From you, the investor. So do not fall into that trap. Number 7, savings certificates. This is no different than fixed deposits and bonds. Same arguments apply here. You will never be able to beat inflation with such kind of fixed income investments. So you are earning negative returns. In fact, any kind of fixed income investment is subject to the threat of inflation and rising interest rates. Both these factors, by the way, are beyond your control. Number 8, gold and silver. A lot of people consider gold and silver as investments. That is a big mistake. Gold doesn't pay dividends, and last I checked, even silver doesn't pay dividends. If you buy them and tuck them away in your drawer, they will do nothing for you except block your financial capital. Gold and silver are wealth preservation tools. Do not buy them as investments. If you want to buy them to store wealth. If you find yourself calculating annual returns on gold and silver, then you are making a mistake. Number 9, real estate. This is again a game played best by the professionals. 90% of the people buying real estate are not buying an asset. Their real estate is not producing any income for them because they stay in that real estate. You have to get into investment real estate to make this a true asset in your life. Well, that requires study and professional real estate education. Stay away from real estate if you do not understand the game the professionals are playing. Number 10, get rich quick schemes. Every now and then you will find someone knocking on your door trying to sell you some get rich quick scheme. It will sound something like this. You will be able to double your money in no time. Remember the basic rule of life that I gave you at the start of this video? Never give control over your time, your money, your emotions and your projects to anyone in your life. The moment you violate this rule, you are inviting unhappiness in your life. Stay away from shiny objects and get rich quick schemes. Learn how to trade and invest your own money. Not having time to learn is an excuse that you are using to avoid pain. Remember, no pain, no gain. So those were the 10 common investments to avoid. Hope this helps. Thank you so much. And remember one last thing before I close the video. Keep your head in the sky, but your feet on the ground. Thank you so much.